What's up, guys? Welcome back to another video. Today we're going to be going over compound interest and how you can utilize this powerful tool to become a millionaire by the time you retire. So let's do some simple calculations. Let's say we started with $6,000 and every year we contribute another $6,000. And so let's say we're starting at the age of 25, and we will let it grow for 40 years, which is pretty reasonable. If you're starting at, of course, 20, you can, of course, retire at age 60. So why are we choosing 6,000? We're choosing 6,000 because that is the max Roth IRA contribution limit. You can only contribute $6,000 to a Roth IRA. And what exactly is a Roth IRA? It's basically a brokerage account that offers, as we can see here, tax-free withdrawals. So it's a very powerful tool. It's not subject to any capital gains taxes. You can day trade in these accounts completely tax-free. And it is probably your priority. You want to open up and contribute to a Roth IRA before any regular brokerage accounts, such as on Robinhood, because you are going to be paying some hefty taxes down the road. So let's take a look at the tax brackets. As we can see here, short-term capital gains taxes, it counts as income tax. So if you are making around, most people are in the 22% to 24% range, meaning they make around 40K to 160K. And if you are in this income bracket, you're going to be paying pretty hefty taxes on your capital gains. You're paying over 20% in taxes. That's where most people are at. If you are new to investing, you don't have a job yet, you are most likely in one of these brackets, and 10% is still a lot for newcomers. So short-term capital gains taxes, that's if you buy and sell an asset within 1 year. If you hold an investment for longer than a year, it is subject to long-term capital gains taxes. And this is a lower rate. It's a lot more favorable, but it still is pretty hefty if you have a lot of capital gains. As you can see, you don't have to pay any taxes if you only make less than 40K in the market. But later on, you are going to have some pretty hefty rates, 15% all the way up to 20%. That's pretty much down the road. A lot of people aren't considering this as they invest. They just see the 0% rate. Oh, it's only up to 40K, and they just throw it into a regular brokerage account. So that's why I highly recommend a Roth IRA. You can open up one easily with brokerages such as Vanguard, Fidelity, even TD Ameritrade. But yeah, let's get back to the compound interest calculator. So the max contribution limit that you can contribute is $6,000 a year, and if we let it grow for 40 years, at an average rate of 10%. On average, the stock market returns gives a 10% return, so that's what we're going to be using. Obviously, this year has been different. The S&P 500 has been up over 20%, but it doesn't always do that. On average, we can give it a pretty conservative 10% per year. So let's calculate, and as we can see, we have a pretty big value here. You will have almost $3.2 million by the time you retire if you contribute $6,000 to a Roth IRA every year, investing in the stock market. And this is assuming you are investing in either the total stock market or the S&P 500. Of course, if you invest in individual stocks instead, you will have a much different return. It could be even greater or even lower because individual stocks are generally more volatile and risky. That's about it for this video. I'm just trying to show you the power of compound interest and why it's important to open up a Roth IRA. Thanks for watching.